Hello and welcome to today's pre-market video. Now I'll be taking a look at the news which will be affecting our markets this whole week. Plus I'll take a look at Axis Bank and HDFC Bank from the point of view of an option trader, plus from the point of view of an equity investor. After that we'll take a look at the Nifty Midcap and see what's its expiry trading plan for both option buyers and option sellers. Now coming to the news. The news on the international front is a mixed basket. I say that as if you take a look, on one hand, we have the Federal Open Market Committee minutes coming out on Wednesday this week, and that will provide insight into the degree of the consensus behind the September's 50 basis point rate cut, which had exceeded many expectations. Now, the minutes will shed the thinking for the future, but it will also share the outlook for the labor market and which risks to the economy the Fed expects to be important. On the other hand, the other international news which I believe will put a huge risk factor on top of the heads of all traders is the Israel-Iran issue. This is on Saturday. Bloomberg is the first one which actually reported this, that it showed pictures of certain high-level top US military guys landing in Israel to have a meeting. So now that either is a photo op just to scare Iran, or they're in the last stages of making the decision to attack Iran this week. So now that puts a huge risk over the head of traders. As, for example, the Fed minutes will be positive, but then if this issue happens, then it will open the market bottom for us, like somebody who has the runs. So that is a big issue that we have to contend with, and anyone who is trading, if you let's say if you're in a box trade and you're trading along, at any moment that risk will keep on bugging you in your mind. So that on the international news is the main problem. Now on the local news, the RBI has MPC meeting this week, and it will start its meeting from October 7th to October 9th, and it will announce its decision on October 9th at 10 a.m. Now the RBI had kept the repo rate unchanged at 6.5% from Feb 2023, and now it will be very important to see what the RBI does. According to most, basically the consensus is that the RBI will not be cutting rates, but I believe they will end up cutting rates. This is simply most of the other banks have cut rates, and the US rate cut was actually larger than expected. Plus, just now the exit polls which I have seen for Haryana and Jammu Kashmir, BJP is getting hammered. Now, a lot will say RBI will try to be apolitical, but he's a guy who is appointed by the government, roughly. So he cannot be apolitical. So I think due to all these factors, there's a high likelihood the RBI governor will end up cutting rates, and that will be a very big positive for the market. However, if by chance he does not, then what we'll have to watch out for is how he highlights the future and what most likely are going to be the future rate cuts that we can see. All in all, I expect this to be a positive event for the market because of the RBI governor needs to reassure confidence into the economy due to all this escalation which is going on between Israel and Iran. And as I said at the beginning of this video, the news is positive largely, but there is one huge negative hanging over everyone's head. Will Israel retaliate to Iran? And if they do, when it will happen? Because you can have all the positive news, but if that happens, then the market will just tank again like it did last week. Now that's it on the news front. Now let's take a look at the stocks. The first stock we will start with is Axis Bank. Now Axis Bank is one stock that I had covered in a previous video, I think on 25th or 26th September, and in that video I had said that I expect that time I had highlighted the resistance zone of 1250, and I had said the resistance zone of 1250 will cause the stock to fall towards 1190. I was spot on. I did not know the Israel issue will happen and basically all the other negative factors will play out like SEBI, but the charts were showing there was an issue, and the charts are correct. We have fallen in a week from 1 to 50. We hit 1190 and broke it and came below it to roughly 1170. So The analysis worked perfectly. So now let's look at what can occur ahead. Now, according to me, in the coming sessions, Axis Bank will be trading in a box range between 1220 and 1150. So any move within this range, equity investors don't think you're going to be go long at, let's say, here, and you're going to exit somewhere here. No, most likely you're not. This is as long as you're within this range, the bears have more of an upper hand, and even with the RBI MPC, and let's say the RBI MPC is positive, Fed minutes are positive, Israel does not attack Iran, still this resistance will need a lot of strength to be blown through. But by chance we blow through 1220, then 1265 is next, and if we blow through that, then we are smooth sailing. On the other hand, if we blow through 1150, then we are going to fall to 1100, but most likely 1100 will not hold for long and it will go down further. So my view on Axis Bank personally, I will be basically using the upswings to sell calls. This is, I think, even if it were to have a bounce right now, the bounce will be a dead cat bounce. It will not be able to sustain for the whole expiry, for example, and most likely Israel will have to retaliate to Iran at some point, and when it does, it will cause this stock to break 1150 and go down side. Now, naturally, no one can time when such a political event is going to happen globally. So that's why I said my trading strategy for Axis Bank, I'm not going to buy it as an equity. I'm going to be selling calls above 1220, and at any point I see a lot of weakness coming, especially in the trend catcher. This is, as if you look, the black line came to zero, but the red line did not. If the red line comes to zero, then that will sort of confirm that this support is going to be going, and that's when I'll start entering hedged option bias on the put side to go short. So I am bearish on the stock, and I think any move is simply a dead cat bounce. It is going to trap traders in. Now on to HDFC Bank. Now HDFC Bank is also another stock that is not doing very different from what Axis Bank is doing. This is as it also had a mighty fall, but I have not covered it recently. I was covering HDFC Bank in these falls and we were catching them, but of late I have not covered HDFC Bank. Now, what do I see HDFC Bank doing? Now, it's in the same position as Axis Bank, as I said, and that's why I expect it to trade between 1690 and 1650. As long as it is within this range, you cannot expect much of a performance from this stock. This is a very important support, and this is a very important resistance. So here we can expect drops to here and rises to here as it tries to find a direction. According to me, as I said, the risk is not ended, and the RBI MPC might cause it to come test this and slightly be positive. And the news that the FI Institute, basically investors, we're going to invest more money into the stock. We'll keep it trying to break this resistance zone. But even if it breaks this resistance zone, I don't think it's an equity buy right now, as there is too much of a political risk due to Israel, and the market is generally very weak. So even the foreign investors are not going to buy a stock when they know, let's say, if it's at this point, they might be able to get it at this point. So they're going to wait for it. They're not dumb, as we have seen from the reports which the exchanges have removed. They have been the ones who have been making more money than domestic investors. So I expect them to play it that way. So again, my trading plan for HDFC Bank, I am not going to consider a long. I will keep trading it via options, and I don't think I have the strength to put option sales in this, as the risk is too high. So this is something which I would prefer for intraday option buying or overnight option buying. Beyond that, I will not try to trade HDFC Bank. A break of this takes us to this, and a break of 1650 takes us to 1600, then 1460 to 1545. Pretty simple, easy trading plan for HDFC Bank. Now next is the Nifty Midcap. Now for the Nifty Midcap, again it comes to a box running situation. This is as the resistance at 12,980 is very strong, support of 12,760 is very strong, and I've highlighted the low of Friday. Now, This is quite a good range. This is basically, I would say, a 1.5, 1.6% range. I expect Nifty Midcap to keep hovering within this range, up and down, up and down, up and down, as it tries to find the next direction. So I expect it to trade in a box range until it breaks one of these levels. However, if it breaks 12,760, then we can expect a quick fall to 12,620 and then 12,560. On the other hand, by chance it breaks 12,980, then 13,100 and 13,180, other thing. So my expiry trading plan is pretty simple. I am going to be entering call sells and put sells simultaneously. Call sells above 12,980, put sells below 12,760. I will not enter them, let's say, how I sometimes do, call sells at a different time, put sells at a different time. I'm going to enter them simultaneously, and I know one side is most likely going to get profit stopped out. Why I say profit stopped out rather than loss stopped out? Because this is going to be a box range. So within the box range, the decay is going to start kicking in constantly because of expiry. So there's always going to be some gain that's going to be on the table. So I'm going to keep, basically, if it's a small gain, I'm going to keep a stop at the cost of entry, and I'm going to let it ride on, and I'm going to add in call and put sells as the day goes along. But as I said, I'll be selling calls above 12,980 and puts below 12,760. If it breaks one of these sides, then naturally that side will get profit stopped out or loss stopped out, whatever situation it is in, but most likely profit stopped out due to the decay, and that is when I will go for an option buy in a big way. This is between this zone, option buys will not be clear. Okay, the zone might be 1.5%, but let's say an option buy you'll be able to capture 0.5 to 0.6% most likely. Not above that, because you're not going to get let's say from here straight like this constantly. You're going to be getting scalps. So within this scalp option buying, and out of this zone, big time option buying. I'm going to use next week's options. I'm not going to do this week's expiry options. This is a range bound area, and so the decay for this week's options will be unfavorable of option buying in a very big way. So again, my trading plan is above 12,980 clean long, below 12,760 clean short, option sells. I'll option sell this range and enter gradually across the day. I want to deploy 100 across the day. I'll deploy 10, 10, 10, 10, 10, 10 until or 20, 20, depending on how I see the market open. So that's my trading plan for the Midcap Nifty expiry. So that's it in today's video. If you liked it, then hit the like button and also subscribe to the channel, and also hit the notification bell. Any questions you may have, you can drop them in the comment section, or you can WhatsApp them to the number shared in the description box.